This is my presentation on my United Airlines Holding Power BI dashboard. This is a collection of financial statements and their stock holding history for the past year. We'll start out with looking at the revenue in the left-hand corner. Kind of reviewed over it between the revenue and then various other aspects of revenue categories in a way, I suppose. The money positive aspects of the money side, and then followed up with the operating expenses to kind of compare where the various points of revenue, do they follow the same trend line? And then in comparison, how do they compare to the operating expenses? And is there a negative relation, or in this case, you look into 2018 to 2019, the slope line does appear to be higher for operating expenses. So they were, although maybe not overbearing operating expenses, because as you can see on the right-hand side, we have the operating expenses label versus the left-hand side, we have the more revenue-based stuff. So 8 million at most in comparison to $40 million value. So they're not toppling revenue. So we're not in a terrible situation, but it is the idea. It did appear that at one point operating expenses were rising at a rate higher than revenue was. But then in 2019, they were able to, or 2019 into 2020, they were able to shift directions by a large margin, as you can see, and we're able to drop down operating expenses into a way more cost-effective range. Now, whether that was a reactionary piece to the COVID-19 pandemic and everything that's going on there, were they reducing staff size, all that, I don't know. But from the numbers, they were clearly able to shift operating expenses, which I think falls into the chart below it, where we look at the cash equivalents versus deferred revenue and inventory. And the inventory is pretty stable within its segment. But when you look at 2019 to 2020, there's a lot more cash equivalents available to the business. And that probably has something to do with that operating expense situation above. So that leads into stock prices and stock situations and where we're at there. So we're going to start here. I've got it down to the 2020 year, but let's pop it up real quickly. So appears to have been a jump from low to high from 20 to 2021, which is a great sign, obviously. So then we pop in down to see kind of where we're going. Maybe. Huh? So then we pop in and you can see here's the 2020 effect. So one thing to keep in mind is we look up here and comparison to, what is it? Stock volume to highs and lows. So when we were coming out of 2019, it looked like we were doing pretty solid. Revenue was in a good spot. So, coming out, we're going to be in a good point. But then as the pandemic hits and revenue starts to fall, the price or the highs and the lows, they fall with it. And then with that, the organization then has a higher volume available to it in response. So, and then these charts over here kind of almost support that, and showing that for up here, right in this chart, revenue was in a positive outlook or in a positive growth trend between gross profit and percentage and actual dollar amount. And then when the pandemic hits, then we hit the drop. Down here, back to the whole stock parts, EPS to total revenue. While total revenue is on a rise, so did the EPS. As soon as revenue dropped, again, stocks drop. I mean, it correlates. People aren't going to invest or want to keep their investment necessarily in an organization that isn't able to maintain their revenue streams, regardless of the situation. So, the numbers actually do kind of correlate and go with it. And with that, they have a higher cash equivalent, so they have a little bit more money to invest within things that they find appropriate. And I'm sure after experiencing such a low operating expense, you would want to strive to not underinvest, but to have your investments be worthwhile. So my solution is to essentially apply analytics against the Pick Your Path program that United Airlines has deployed out to ensure that this solution is hitting the targets that it is. And not only that, how does it affect the other demographics that it doesn't affect? Is it pulling more customer engagement because they want to be a part of this program because they see the benefits? Or rather, are the benefits not great enough to pull maybe the lower tier members up into that higher tier? Because, as you get more customer engagement and the travel restrictions loosen up, if you can continue more customer engagement and ensure that, United Airlines is able to uh, grab onto the market that's available to it, you know, um, it's only going to push revenue up. So that is my presentation. I hope you enjoyed it. Please have a great rest of your afternoon.